All right, let's dive right in. Rajhi Bank just dropped its latest quarterly results, and wow. We're not just talking good, we're talking record-shattering. So today, we're going to break down exactly how this banking giant is pulling off such explosive growth, dominating its market, and somehow getting even more profitable. Let's get into it.
So, to really wrap your head around this story, you just need to know one massive fact. Al Rajhi Bank, or ARB as we'll call it, isn't just a big deal in Saudi Arabia, it is the single largest Islamic bank in the entire world. And that incredible scale, well, that's the foundation for all the crazy numbers we're about to dig into. You know, being the biggest is great, but that's not the whole story, right? The real question is, are they actually performing? Are they still growing? Or are they just, sitting comfortably on that throne? Well, that's exactly what we're going to find out. Okay, first up, let's set the stage, because to really get why these financial results are so impressive, you've got to understand the world they're operating in and just how deep their roots go. Just look at that number for a second. Almost 20 million customers. Now think about this. In a country of around 36 million people, that is just a staggering piece of the pie. We're talking about a colossal customer base that gives them this incredible reach and, frankly, a massive engine for growth. And it's not just about being big either. It's about being trusted. Al Rajhi is the #1 most powerful banking brand in Saudi Arabia. And that's absolutely crucial, right? Because in a competitive market, that's how you hold on to almost 20 million people. Now, of course, a bank this huge doesn't exist in a bubble. It's totally connected to the national economy. And right now, that economy is giving them a serious tailwind. You can see here, after a little dip, Saudi Arabia's GDP is on track to grow by a healthy 3.5% this year. And for a bank like ARB, a thriving economy means one thing: more business, more loans, and a ton more opportunity. So you've got this market leader with a strong economy pushing them forward. The big question is, how does it actually translate to the bottom line? Let's get to the juicy part, the headline numbers. And yeah, spoiler alert, they are wild. And boom, here it is. This is the number that's got everyone talking. A 32.5% jump in net income compared to last year. I mean, come on, that's not just growth. That is absolutely explosive, especially for a company that's already this big. And look, that huge profit jump, it wasn't some kind of fluke. The growth was literally everywhere you look. Total operating income up over 26%. Total assets up almost 20%. And get this, they smashed through the 1 trillion riyal mark for the very first time. This isn't just one lucky number, this is the whole engine firing on all cylinders. Okay, a 32.5% jump in profit is amazing. But where did it come from? How did they do that? So in this next part, we're going to pop the hood on this growth engine and see exactly what's making it roar. This chart right here, this is basically the bank's DNA. You can see their bread and butter is retail banking, mortgages, personal loans. That's a solid 2/3 of their business. But the real story, the interesting part, is that other third. They are making a huge push into corporate and small business lending, and that's how they're diversifying and finding new ways to grow. And here's a perfect example of what I'm talking about. Just look at this. In only a few years, they've gone from having less than 9% of the corporate loan market to over 14%. That doesn't happen by accident. That's a clear, deliberate strategy to be the go-to bank for big businesses, not just for everyday people. And at the exact same time, they are absolutely crushing it in digital payments. We're talking about the little machines you tap your card on everywhere. Their market share there has leaped from about 1/3 of the market to almost 44%. Think about that. When you control that much of how people pay for things every day, you're not just getting fees, you're getting a treasure trove of data. So you're probably asking, how on earth did they pull all of this off? Well, it all comes down to their big strategy, something they call harmonize the group. And the proof is in the pudding, right? Customer base up 25%, the SME portfolio, an insane 53% growth. And now, almost half their customers have more than one product with them. See? This is not just random luck. This is a plan, and it is working perfectly. Okay, so we know the bank is growing like crazy, but is it smart growth? Is it efficient? Is all that new business actually making them money? That's what this next part is all about, the bottom line, and just how good they are at turning $1 of revenue into pure profit. Let's just break down how a bank actually makes money. Super simple. On one side, you have what they earn on all their loans and investments. That's the gross yield sitting at 5.85%. Then on the other side, you have what they have to pay for that money, like on deposits. That's their cost of funds, which is only 2.71%. That nice wide gap in the middle, that's where the magic happens. That's the profit. Now check this out. This number shows you just how incredibly lean this company is. Their cost-to-income ratio is only 22.5%. Let me put that another way for you. For every single dollar they bring in, it only costs them about 22 cents to run the business. That's not just good, that's a world-class, incredibly efficient machine. And what does all that incredible efficiency mean? Well, it means fantastic returns for the people who own the bank. A return on equity of over 23% is something most banks can only dream of. And when you see earnings per share jump by almost 30%, you know that every single bit of this growth is creating real, tangible value for its shareholders. So, we've seen the record numbers, the winning strategy, and the insane efficiency. So, what does it all mean? What's the big picture? And where do they go from here? So, if we boil it all down, what are the key takeaways here? Well, it's pretty clear Al Rajhi Bank's success is no accident. It's a finely tuned machine that's using its massive retail business to push into new areas like corporate and SME lending. It's doing all of this more efficiently than pretty much anyone else. And it's got a strong home economy giving it a nice boost. It's really the perfect storm. And that really leaves us with just one big question, doesn't it? When you have a dominant market position, a winning strategy that's clearly working, and a booming economy, the bank just seems unstoppable. So the real question we're left with is, what could possibly get in their way?